Hi, my name is David Hodgson, Executive Vice President with Chesswood Group, and I'm joined by Chris Wallbank, Executive Vice President and a member of our portfolio management team. We wanted to take a few moments to introduce you to the Chesswood Canadian Asset-Backed Credit Fund and highlight why it's a good solution for those looking to add private credit exposure to their asset mix. Chris, maybe you can provide an overview of the fund.
Great. The Canadian Asset-Backed Credit Fund is designed to provide attractive risk-adjusted returns with significant interest income, a focus on capital preservation, and regular distributions to unitholders. The fund targets annual returns of 8 to 10% with low correlations to public markets by investing in a highly diversified portfolio of short-duration assets. These are primarily underwritten and serviced by Chesswood's Canadian subsidiaries in the commercial equipment, automotive, and home improvement sectors.
Can you maybe touch on some of the attributes that you believe differentiates our private credit offering and how we administer and manage the fund?
Our Canadian operations evaluate over 100 million of applications for equipment financing each month. There are over 180 team members focused on credit adjudication, portfolio administration, and collections. Our credit adjudication team leverages a proprietary credit scorecard to guide consistent analysis and decision-making, allowing them to effectively price for risk. Our servicing and collections teams have experience managing these receivables over several economic cycles. The Chesswood Canadian Asset-Backed Credit Fund is anchored by a portfolio of equipment finance, lease, and loans to prime commercial borrowers and is complemented by consumer home improvement and automotive loans. These receivables make monthly payments and carry little to no residual value risk. More importantly, they are secured by equipment that is essential to the day-to-day operations of each borrower. These leases and loans are governed by standardized documentation and enforceable contracts that provide us with recourse in the event of default. With an average size of under 30,000, these credits are diversified across geographies, industries, equipment types, origination sources, and obligors. All contracts originated by Chesswood subsidiaries are initially underwritten by the appropriate credit teams. These contracts are then independently evaluated by the portfolio manager for their suitability in the fund.
So there's a number of direct lending funds in the marketplace. We know liquidity has been a drawback to more widespread adoption. Can you maybe touch on the fund's liquidity and payback cadence?
Yes, for our equipment leases, the average term is approximately 48 months, and the payments are fully amortizing, meaning each payment includes both principal repayment and accrued interest. This not only provides liquidity for fund investors of approximately 5% of net asset value each quarter, but also reduces refinancing risk. Specifically, the principal return in each payment is a natural credit enhancement. This reduces the investor's capital at risk as the loan is paid back each month. In contrast, traditional corporate bonds make semi-annual interest payments and principal is repaid in full at maturity. The monthly payment schedule associated with these leases and loans allows the servicing team to have immediate feedback on the status of each borrower. If a payment is missed, it can be determined in short order whether the collections team needs to begin their standardized enforcement and recovery process. This core group of prime equipment receivables is complemented by higher yielding non-prime automotive loans and working capital loans to borrowers with a long-standing and consistent payment history.
So what's the current structure of the fund, and are there any plans for an RSP eligible version?
That's a great question, David. We launched the fund earlier this year targeting high net worth investors with a limited partner structure. Waypoint Investment Partners, our asset management company, is the manager that oversees the fund's operations. We expect to launch a mutual fund version with eligibility for RSPs and other tax-free accounts very soon. Stay tuned.